All right, traders, we're back again to the part 2 or episode 2 of the different entry models of smart money concepts. And today we'll be talking about fair value gap. The last video was on order block. Remember, we're talking about the 4 popular entry models for smart money concepts. We have the order block, fair value gap, breaker blocks, and flip zone. So I'm going to be explaining these 4 entry models. Today we'll focus more on FVG. So let's go to the chart, guys. What is fair value gap or FVG? So this simply means an imbalance in the market where price moved so aggressively in one direction that it left a gap between candles without proper trading activity. Now, this gap often acts as a magnet for price to later retrace into it before continuing. So these moves, it's more of a trend continuation entry. If you want to be catching smart entries with, fair value gap, it happens when the market, is moving aggressively and then there is a gap. Price will most likely come back, tap into that gap and keep pushing to the upside. This is very popular if you are trading XAUUSD. But then today's video, I'm just going to show you how you can spot valid, fair value gap that, can be very useful, when it comes to setting your entries or your POI. So the next question we have here is, why is fair value gap or FVG important? Now, when the market is moving, it is, proper for both the bulls and the bears to have equal movement. But when that doesn't happen, that is when FVG, the gap will be created, in the chart. So price often returns to fill the gap because the market seeks balance, and traders can anticipate retracement into the FVG for high probability setups. So I'll show you guys on the next slide, how to spot this, imbalance, because when you're looking at the chart, you may be able to see a lot of them. But then I'm going to show you the one you should, focus on, and how to strategically set your entries using fair value gap. On how to spot valid fair value gap, I also have some tips listed here. Now, number 1, the trend matters. It is important you also pay attention to the trend, just like I stated when we were talking about order block, because the probability of your trades playing out when you are sticking to the trend is higher than when you are going against the trend. And for fair value gap, it happens when the momentum is very high, and when the gap happens, price can just come back, tap in, and keep moving. So that's why you need to pay attention to the trend if you want to catch smart entries using fair value gap. And then the gap, is created between 3 candlesticks. Now you can see this is a bullish imbalance. Have it in mind that before you start looking for the imbalance, because like I said earlier, price can create a lot of them on the charts, but you need to pay attention to the one that caused a break of structure. So once that break of structure happens, you look out for the 3 candlesticks, before that break of structure. And when mapping out, you'll map out from the first candlestick closing point. You can see it here. So this is, you can see price pushed up, closed here. Now, if price was moving as it should have covered up the gap when, this one opened. And then from here, price should have covered up the gap. But you can see after this one opened, closed, another candlestick opened, which is the 3rd candlestick. And from there, price continued to shoot to the upside, leaving out this gap here. So the gap from the closing point of the first candle to the opening point of the 3rd candle, so the gap in between, is what is called an imbalance, and price will most likely, come back, mitigate the imbalance, and keep pushing to the upside. So have it in mind that the imbalance must create a break of structure. So you should not just see any imbalance and just start setting your entries from there. Pay attention to the trend, and it must also create a break of structure. And then there should also be liquidity price will clear before, tapping into the imbalance. Let me also show you guys a bearish structure, because this one is for, bullish structure. So this is an example of a bearish imbalance, just same thing with, the explanation for the bullish imbalance. So make sure break of structure is present, and then you look out for the, first three candles, and then you map it out from the closing points. When it's a sell, you can see it's from the closing point of the first candle and also the opening point of the third candle. So the gap in between is what is called imbalance, and price will most likely, come back into this point and, keep pushing. Like I stated before, this, happens more on XAUSD, that is if you trade gold. But then remember, trading is risky. All you just need to do is backtest and see if it works for you, and, compare the win rates before you decide, to risk your money. I'll also show you guys some of the entries I've been able to catch using FVG. So this is how to place your entries if you want to be taking your trades from FVG. So once that happens, you can see price retraced, just tapped in and continue to the upside. Now have it in mind that this is more of a trend continuation entry. It happens, very fast. I've experienced that, with XAUSD using this particular entry, as an example. So once it happens, price may, most likely leave out the order block and just tap into the fair value gap and, start pushing to the upside. And then when setting your stop loss, it will just be a little bit below the FVG. Some traders may want to try to, serve two masters at a time. And when you're trying to take trades from FVG, and then you will now drag the stop loss to also accommodate the other block, that will, kill the risk to reward ratio of the trade, and you will see that your stop loss is even way more bigger than what you are trying to achieve. So if you are trading, or if you are taking your entries with fair value gap, all you just need to do is put your stop loss a little bit below the fair value gap. Just stick to the fair value gap and then wait for price to tap in and then push to your direction. Let me also show you guys a bearish entry that I also got from XAUSD. All right, traders, so this is for, bearish entry, just for a sell. Now you can see once it happens, price will return to the FVG and it will just drop, just more like, how we catch entries using order block. But this happens when the momentum is very strong and, price is shooting, aggressively to the downside or to the upside. So once that FVG is created, all you just need to do is patiently wait for, price to get back into that FVG that caused the break of structure. Because now if you check this particular trend, you also notice that we have FVG here, and you can see price did not respect this one. It targeted the one very close to the order block. Remember, one of the confirmation, for pointing out valid order block is the FVG that is very close to the order block. And most of the times, price may just come to that FVG, react and push to our direction. So that's why when you are trying to take entries from FVG, don't just, map out any FVG on the chart. Map out the FVG that caused the break of structure, the FVG that is very close to the order block, and patiently wait for price to get there, tap in, and, stop loss a little bit above if you're selling or below if you're buying, and just wait for price to dish out the result. So I keep saying this works very much on gold, but at the end of the day, apply proper risk management. Remember, no amount of over analysis or how beautiful your setup is, that does not guarantee profit. So have it in mind that trading involves risk, and you can also lose your capital. So this is just for you to understand how to strategically position and take your entries with fair value gap. All right, traders. So in our next video, we'll talk about breaker blocks. I've seen that play out, most of the times. on the chart. So I'll show you guys how to, strategically take smart entries using breaker blocks too. So make sure you subscribe, turn on the notification bell so that you always be the first to be notified, and don't forget to like the video. I'll see you guys on the next video. That is